Well, guys, it's just about that time, so I want to be respectful of everyone's time today. Thank you again for joining us for our third session. Today, we're really going to take a deep dive into the financial side of board service. We're so lucky to have Katie with Landmark CPAs here today to kind of talk about that. And it's going to be the same rules as what we've done in the past. If you have a question, feel free to drop it in the chat or just take yourself off of mute and ask it. I'll keep a close eye on the chat and try to answer any questions that come through there. But I'm going to get out of the way and turn it over to Katie. And Katie, thank you so much for being here today.
You bet. You bet. I'm excited. This is a great group. This is a great cause. As we were talking about the number of nonprofits in the area, there's a huge need for professionals to be involved with those nonprofits, to be able to help steer them in the right direction. So we get to talk today about everybody's favorite aspect of being on the board, and that's the financial aspect of everything. So I've got a couple topics to talk through. I do want to keep it casual and open, so ask questions and we'll talk through those pieces. I have approached this in the sense of most of you are non-financial professionals. So some of you might know half of what I'm talking about, but we'll at least start with this basics so that everybody's on the same page. I've broken it up into a handful of categories. So I want to talk about internal control aspect of the nonprofit organizations. I want to talk about budgeting and planning and kind of those internal functions. And then we'll switch over to talk about the compliance, the tax side of things, and then the audit and the grant side of things. So lots of different pieces moving here, and they're all interconnected. So we'll kind of bounce around a little bit more. And in your previous sections, I'm assuming that we've definitely gone over the responsibilities of being on that board, that fiduciary piece that's so important to make sure that you're committed to that board. One of the things that in my observations of participation, and keep in mind, every board I've ever been on, I get asked to be the treasurer, right? That's what the CPA does. So, but every board I've ever been on, you have to evaluate what type of board it is. Some boards are more oversight, some boards are more active. Some organizations, their volunteer board is their management. Okay, so we'll talk about that a little bit differently as we go through here, because the roles will be different if you're handling the day-to-day management or are you just the oversight of the organization. So a couple differences there. So I'm going to start just talking about the internal controls. Internal controls are important. And as far as, you look at what are the purpose of internal controls. Well, everybody knows internal controls are there to prevent fraud, right? Well, that's not all they do. Internal controls are there to also protect the assets in the sense of, making sure they are managed appropriately. They are there to protect the organization from the people working in the organization, but they're also there to protect the people. When the opportunity is eliminated, it protects both sides of that transaction. So it's important to understand that internal controls benefit everybody involved. But there are 5 main components. First component is control environment. And that is a lot of where the board has a role. They set that tone at the top on what is going to be important in that organization and how important the day-to-day controls are. So control environment, risk assessment, control activities, communication, and monitoring. Those are those 5 elements of internal control. And like we said, control environment is so crucial for the board to be involved in. They are going to set that tone. And they do that through a process of risk assessment and communication. And then of course they have to determine what those control activities are going to be. And this is where your difference comes in. If you're in oversight, you're in charge of making sure that management has put control activities in place to protect the organization. You're in charge of monitoring those activities. Now, not down in the weeds, not in the details, but the overall monitoring of those activities. If you're management of that organization, then you're actually carrying out those activities. So that's a big difference in the level of detail of that board. Okay, so one of the things that we see the most in nonprofits, especially when we're talking about the smaller nonprofits, is the idea that one or two people have access to everything, right? Just like a small business. We don't have enough people that are involved to be able to completely segregate the duties of the organization. Therefore, we have this lack of segregation. So, you know, in our accounting world, we like to make sure that one person controls the asset, the physical asset. A separate person has the ability to authorize the use of the asset. And then the third person has the ability to record the asset. So here, think of cash. So some person has control over it. They have the ability to sign on those accounts. Another person is the approver. They can approve if that transaction or that payable is allowed. And then somebody else records it. And you guys know in most organizations, all three of those are done by the same person. So therefore, there's no segregation of duties, and therefore we have a risk. We have a risk that something could go through that wasn't approved, that wasn't appropriate, and how do we account for that? What can we put in place to help those small organizations be able to mitigate that risk? So there are some things to keep in mind, but a lot of that is the control environment that is set by the board. You know, what questions are they asking? What information are they looking at? What do they see in that monitoring process to defer or to deter that activity that might be at risk? I think it's important for board members to understand, you know, fraud happens in environments of trust. When you don't have trust in an environment, when you have controls in place, you can eliminate that risk or reduce that risk of fraud. You know, fraud occurs when you have, you know, you've seen it, the fraud triangle. There's opportunity, there's incentive, and then there's rationalization. So when there are not segregated duties, when there are risks associated with our internal controls, that creates an opportunity. So the other aspect of nonprofits that's a little bit different from the for-profit world is the idea that most people who work in nonprofits don't get paid a lot of money. So in these smaller nonprofits, their salaries are less. And that can lead to this rationalization that I do a lot of work, but I don't get paid a lot, so maybe this is okay. So those are just risks that exist in this type of environment. And it's important for the board member to step in and create that environment that says, we do everything right. We do everything open, we're transparent. Here's the activities that we're gonna do to mitigate this risk. And that responsibility does sit at the board to take care of those internal controls, those processes. The best thing that a board member can do to mitigate some of these tasks is to have the bank statement sent to a board member, just an extra copy of the bank statement sent to the board member directly to their house, where it doesn't go through the organization. They receive that bank statement. Everybody who's taking care of the books knows they received that bank statement, and they review it for reasonable transactions. And of course, this is applicable to those smaller nonprofits that you're involved with. You know, one, it is a monitoring activity. If you're familiar with the types of transactions that will occur, you know, you can look through that bank statement pretty quickly and see if anything stands out. The other is a deterrent. The bookkeeper, the person who's taking care of the finances, is going to know that you're receiving that bank statement. They know you're going to compare it to the bank reconciliation. And so that piece of it is a great deterrent to avoid that opportunity that might exist. The other piece that comes into play with our control environment is the structure of the organization related to the policies and procedures. So it's important to define the control environment and to define those control activities. And we do that by having written policies and procedures. And those cover many different topics. They could cover the financial aspects of it. You need policies to cover the HR aspects of it. Most organizations need to have a conflicts of interest policy, and that deals with the related party nature of a board and the organization. It limits the amount of transactions that can happen in a related party nature between the board and them to make sure that they are taken care of. And so that's a policy that probably needs to be in place. Gift acceptance policies are relevant to a nonprofit environment. How and what are we going to accept, and what are we going to do with those items once we've accepted them? And then as you get into grants and things like that, what are your policies and procedures? But having those written policies and procedures is what's going to set up that structure to be able to protect those internal controls and allow the board to do its job. So that's super important. And the auditor in me says, if it's not documented, it didn't happen. So I do believe that as you define what these steps are, there is a documentation in place to where it might simply be a matter of not reviewing the details, but reviewing that somebody else reviewed the details. Documentation is the whole nature of having board minutes. You are documenting the actual decisions that came out of the board to be able to show those at a future date and apply those, implement those decisions. So documentation is very, very important, and it gets more important depending on the types of revenue that you see come into play. Okay, so there's my spiel on internal controls and the importance there. But a lot of our nonprofits are busy doing what they need to do to take care of their mission, and that internal control piece is put to the bottom of the list. And that's why I think it is important for the board to help set that tone at the top and make sure that is still a priority and that things are still being done like they're supposed to be done. Okay, so as we still looking internally at what some of the board's duties will be related to the financials internally. As we prepare financial statements, as you review the information that will be presented to you as a board member, that is internal in nature. It is also historical. Half of what accountants do is document the past. So it's very historical. It's what happened. Well, the other aspect of that is looking forward. So we do that with what we need to do with our budgets. So as each organization should have a budget. How do you know if you got there if you don't know where you're going? You've got to be able to set that direction. Something else that comes into question all the time with our nonprofits is people think that they should not have profit. A nonprofit by nature was organized for a different purpose than profit. However, that does not mean they should not have a profit. A business, including a nonprofit, will not continue without profit. So it is important for a break-even or more approach to a budget or into each year to make sure that there is that reserve rolling forward. Okay. The board has a lot of say in the level of detail that they want to see. So in a lot of ways, you can see a high level, financial statements to be able to show what the transactions were in the past month, year to date, however that might be. But it is important for the detail to be set by the board. What would you like to see? Another aspect that comes into play that I find that's very important is related to how you get the information. So everybody has got a system to be able to keep their accounting. Their books are in QuickBooks or another software that presents that report. Is that report directly from the software package that you're reviewing on a monthly basis? Or does that report get into Excel, get manipulated, and then presented? And there are reasons for that to happen, but at the same time, once that occurs, you might not be looking at the actual information. So it's important to know what type of information you're receiving and how you're receiving it to know how it can be relied upon. So we want to make sure that information is reliable as possible. Okay, as we look at a nonprofit, they utilize a little bit different set of accounting rules. So most nonprofits will work with something similar to a fund accounting, where I don't actually just have to keep the books of the organization as a whole. I have to keep it by department or by programs. I have certain programs that I need to know what all the income and expenses are for each program or each of those funds. There might be transfers back and forth between those funds, which is just a little bit different than your typical business accounting, more similar to some type of divisions. So it's a little different in what you're going to review. I do think it's important to have that trickle down ability to break it down to find out how each program is doing. Different grants have different grant years. So you might have to look at different pictures to be able to find out how you're doing in that grant. Are you meeting that grant? Are you doing everything that you should be using that money for? So that's an aspect of it. A lot of times when you're working through internal financial statements, you are keeping the books differently than you might on an external audit or other set of financial statements. A lot of your nonprofits might keep on a rolling basis on the cash basis. So we record income when it comes in, we record the expenses when they're made. We're not necessarily tracking a lot of pledges. If somebody said they were going to donate, there's other aspects of that. But if I have to present generally accepted accounting principles in an audit, I would have to do that on the accrual basis. So therefore, there's a difference in the type of accounting that you might look at on a monthly basis versus what would need to be converted for an audit or different types of reporting at the end of the year or the end of a grant. So you kind of need to know what the standard is. And this is where your board orientation comes in. When you start with a new nonprofit or you have somebody start with your nonprofit, they need to know what the details are of what they're looking at on a monthly basis for the financials. You know, is it a cash basis? Is it accrual basis? Is it a mix of both? Are we showing it by program? Do we show it at this level? And kind of how it gets laid out. How does the organization budget? Are they going to come up to a zero budget every year? Do they increase everything by a certain percent? You know, what are the aspects that come into play when they look through that budget, and how is it determined? The other piece that's important about a budget is to actually look at the budget to actual. That seems like it would be straightforward, but I think it's important to actually go through an evaluation process to see if you're on track. If you're not on track, what needs to be done? What needs to be changed? Make adjustments as you need to go. Look at how your revenue is fluctuating. 2020 is a perfect example of people having to relook at their budgets and determine what we need to do differently to make sure that we're making ends meet and we're still accomplishing our goals. So another aspect of nonprofit accounting is the idea of functional expenses. So typically when you present a financial statement or you present an income statement, you're looking at the natural classification of expenses. I've got rent, I've got payroll, I've got supplies allocated by their natural classification. For nonprofits, you're also required to look at the functional classification. So you have to group items in program, general and administrative, and fundraising categories. So as that, you have to be able to track, say, payroll. So if somebody takes care of the books, but then they also do program activities, and they also are in charge of fundraising, we need a time allocation to know how much of their payroll needs to be put in these buckets for that reporting. So that's a different piece that applies to that not-for-profit accounting that you're going to have to be able to track some of those things separately. Okay, and then cash management comes into play. But keep in mind that some cash for a nonprofit can be very restricted. A lot of programs and a lot of grants, you are given a certain amount of cash and it can only be used for certain purposes. So it is important to protect that level of restrictions that are related to how that money was given. All right, so well, let's talk about that just a little bit more. One of the fiduciary responsibilities of a not-for-profit board is to protect the donor's intent. So if a donor provides a specific donation and says, I would like this to be used for the building, it is important that there are procedures in place to ensure that that money is used only for that purpose. That money is considered donor restricted, okay? So a nonprofit can have unrestricted amounts. I would like you to use it for whatever you need to use it for. Some are restricted, donor restricted, so that the donor is who initiates that restriction. And then there is designated. So designated is the restrictions that the board places on a income stream or on a certain amount of cash or a certain asset. The board can say, we would like this to be used for the building fund. The board has the ability to take that back. If a donor requires it to be used for a certain purpose, only the donor can remove that restriction. Therefore, it's a different level of restricted. And I see a lot of people struggle with those terms. And in the accounting world, they have specific definitions and they have to be disclosed in specific ways. But the key is to make sure that there are steps in place to record that restriction. How are we tracking that? How do I know that, you know, this money came from this source and it has to be used for this purpose, or this came from a different source and has to be used for that purpose? I've also seen some organizations struggle with making sure it gets spent. If something gets donated for that off purpose that you don't do very much, and maybe it's a year or two before you do it again, you're having to hold that money for that purpose. And of course, you know, that has issues to the donor because they wanted to see it spent for that purpose. So it's important also not only to monitor that it gets put in the bucket for the right purpose, but that it is getting spent on that right purpose in a reasonable period of time. But that's a big issue when we look at nonprofits, is protecting that donor intent and making sure you have methods to do that. I can't tell you how many audits we go into, and it's a lot of question about what's restricted and how do you know? And they're like, well, we kind of put it over here. And so you really need a system in place. It doesn't necessarily have to be a software package, but you definitely want a system in place to be able to support those donor restrictions. And then being aware of what is restricted by the board versus restricted by the donor. Okay, so now we're going to switch over a little bit more into the compliance or the tax side of things. Yeah, I know you're thinking tax, it's a nonprofit, we don't have to deal with that, but yes, you do. So the first piece is, to become a nonprofit, you actually have to apply to the IRS to be treated as a nonprofit. And the IRS provides you with a determination letter. So I think it is important to make sure you have a copy of that determination letter. There's a lot of times that I see, especially in your smaller organizations where maybe they've been a nonprofit for so long, but not really sure they ever were truly a nonprofit. So I do think that's important. So, but that's kind of a piece of that board orientation, having that IRS determination letter along with your articles and your bylaws and your policies set up for. Most nonprofits fall under the category of a 501c3, a charitable organization. There's many types of nonprofits, but that is the main one that we see that are going to accept and receive donations. So it is also important to note that by being a 501c3, you are not eligible to participate on the political side of things. So there should be no lobbying cost associated with the organization. Lots of restrictions there. So even though a nonprofit does not have to pay income tax, they do have to file an informational return with the federal government, and that's what we call the 990, the Form 990. And there's different versions. So an in or a postcard Form 990 is for those organizations that have 50,000 or less in revenue. So basically it's you go online and you submit, some basic information, and that's all there is to it. There's an EZ 990 that's between that 50,000 and 200,000 in revenue and less than 500,000 in assets. It's a shorter form. And then you have the full 990 for those that have over those amounts. It's in some states, you are required to submit your federal 990 to the state also. So just keep that in mind in the areas that nonprofit works in. A nonprofit organization can have activities that require it to pay taxes. So it can have unrelated business income. This is income that is outside of its nonprofit mission and therefore subject to tax. A nonprofit can actually own a for-profit entity. And in that instance, there is, the ability for that income to be taxable. So there are instances where an organization would file a 990T, which is that unrelated business income. So as you are being creative and trying to find other ways to reach your mission, if you go outside of that, be aware that there is a risk that you would want to make sure you're filing, treating those items as taxable. The largest risk related to a nonprofit is to lose its nonprofit status. So it's important to make sure that you're doing the necessary things and you don't blur that line with the political and the other items that come into play. One of the important things about the 990 to remember is it's public information. So I can go out there right now and on GuideStar or other areas be able to get just about any 990 I need to. It's public information and it represents your organization. There are certain boxes that have to be marked certain ways and certain information, but for the most part, it can read like you want it to. The mission on page 1 of the 990, you want to make sure has the wording that you want it to represent your organization. So make sure that as you're reviewing that 990, that it represents what you would want it to look like, because it is public information.
Katie, I have a quick question. Who typically fills out the 990?
It can be done by, it can be done within the organization, or you can hire an accountant to fill it out for you. We prepare a lot of 990s. So it just depends on what you're comfortable with. It can be done just like a tax return. It can be done internally, or you can outsource that to a CPA firm.
Like the postcard 990, that's pretty easy to fill out, but the full-on 990, that's where you might want to do that. You wouldn't necessarily do that as a board member. You would want to do like an outside firm, or if they have an accountant there, have the accountant do it there.
Yes, that's what we typically see. So, and we even prepare the postcards for a handful of people, but those are very, very simple. It's more along the lines of looking, discussing with the nonprofit to make sure that they're picking up the right numbers, to make sure that they are eligible for the small postcard version, and then making sure they're filling out the rest of it appropriately. There's a lot of questions on the 990 that have to do with your policies and procedures. Do you have a conflicts of interest policy? Do you have this? One of those questions is, did the board have the opportunity and review the 990 before it was submitted? That's kind of like their responsibility to make sure the board is taking ownership of the presentation of that 990. So it is important for that 990, however it's prepared, to come before the board for review prior to being submitted.
Perfect. And then kind of backing up to the donor restricted funds.
Okay.
Do those have to be spent in the year that it's received, or okay?
No, and you see that very common with building funds. You might have a building campaign for 5 years before that money ever gets spent for that purpose. You just want to, it depends on the type of donation that you would want to watch how long you sit on that money. But there's a lot of it that when you're gearing up to something, you might not spend that money in that year.
Okay, perfect. Sorry, there's just a couple questions in the chat, so just trying to get caught up there.
Okay.
Sorry to interrupt.
Okay. The 990s are due the 15th day of the 5th month. So if you're a calendar year end, they're due on May 15th. They get extended to they can be extended to November 15th. So it would be applicable based on the year end of the organization. So you got a lot of time. You got a lot of time to get that done. Okay. All right. Now, related to that compliance piece of the organization, when you receive donations and you provide a receipt for that donation, the IRS dictates specific wording that is required on that receipt. And this is something we see missed a lot. So in order for that donation to be deductible to the individual who made it or the organization that made it, it is required to have wording to say that no goods or services were presented in exchange for that donation. And we see that missed a lot, that specific wording isn't on there. And if the IRS was going to get really picky, they could eliminate that deduction for the individual, who would then come back to the organization and be like, what happened? Why didn't I didn't get this because I didn't have the right wording on there. So it is important as you are making receipts and providing contribution statements that you make sure it meets all of the requirements. An organization for non-cash donations is expected to provide a receipt. However, that receipt does not have to have an amount on it. The organization is not required to tell the donor what the fair value of those items are. But you are to provide a receipt and it has to have the wording on it. So there are specific rules over those receipts and contribution statements that need to be followed. Something else that a lot of people miss is Arkansas has charitable registration requirements. If you do any type of solicitation, which is any way of asking for donations, then you are required to register with the state of Arkansas. I believe there's a limit, like $25,000 threshold that you have to be over for that. But if you are required to then register with the state of Arkansas, which puts you on their website, so that's a good thing. If somebody's going to go look for organizations to donate to, they would have access to the charitable registry with the state of Arkansas. But there are also audit requirements associated with that. So if you are an organization that has the solicitations over a certain amount and your assets reach a certain level, you might find, or revenues reach a certain level, you might find yourself in an audit requirement that did not come from a grant. So that's something to keep in mind, is looking at the state requirements. In addition to what your reporting is required for the federal government, you need to look at those states and make sure you're meeting all the requirements there. And then we have all the other stuff. You've got wages. Are you doing the things that you need to do with payroll? Does payroll look okay? In a lot of our nonprofits, we have people that are working many, many hours for very little pay. And are they treating that correctly for overtime rules? I mean, the DOL has recently changed its rules and raised those thresholds where if you're under that amount, you should be getting overtime. Are you an exempt employee or are you a non-exempt employee? So at some point, the organization, whether it be the management or the board, needs to make sure that they are doing those aspects correctly. Have we got the employees treated correctly? Are we paying the overtime we need to trade? Are we limiting hours if we need to limit hours? I mean, how are we doing that? And then the 1099 reporting process. Are we getting W-9s that we need to get? Are we reporting 1099s that we need to provide? So there's a lot of compliance aspects that still are associated with a nonprofit, even though they're not federal income. Another aspect, in many ways, a nonprofit is exempt from sales tax, but not always. So if you are looking at doing specific things, evaluate whether or not you are eligible for a sales tax exemption, or should you be paying sales tax on something? So those are, different rules everywhere you go on whether or not that should happen. Okay, so now I want to talk a little bit more about the audit and the grant side of things. As we dive into, I guess the first question is why would I have to have an audit? If I'm a nonprofit, what would cause a not-for-profit to be required to have an audit? So we talked a little bit about the state's requirement, but for the most part, somebody outside of the organization has to require an audit to be performed. Most of the time that's associated with a revenue stream. So is there a grant or federal money that's being received that would require the organization to have an audit? My personal experience is on the NWAEL Board, and we require our agencies to have an audit. So each one of those agencies goes through the process of an audit. So that is the determination, is there's got to be some outside requirement to do that. And then you have to determine what type of audit you have to have. So as we look at different grants with different organizations, many of these grants come from either the state government or they come from the federal government. Sometimes they come from the federal government through the state government to the organization. And if there's monies that come through the state, you have to look at the state's requirements. And if it's federal monies that either come directly or through the state, we have to then apply federal requirements. So now we're looking at different types of audits. So we have our basic level financial statement audit, where somebody comes in and says they did not find anything materially out of compliance with generally accepted accounting principles. Keep in mind, there's a lot of differences between our internal bookkeeping and what might be required to be presented on an audit or on GAAP financials. So we have that basic financial level. And then we add a level on top of that, it's called a yellow book audit. And it is an audit in accordance with governmentally accounting principles, that auditing standards. So it's that gas audit, or the yellow book audit is what it's typically called. And it's an extra layer of compliance testing. So you're looking at those federal and state grants, those government grants, and doing an extra level of compliance auditing. So Arkansas DHS requires any funds that are received over $100,000 to have a yellow book audit. So that extra layer is added on top of that testing, so that you are testing those programs. So then we can add another layer on top of the yellow book audit, which is called a single audit. It's got a long name now. It's called a single audit. It's audit in accordance with the OMB restrictions. But basically, if you receive federal monies of $750,000 or more, you are subject to single audit. And if that requires you to select specific programs to do additional compliance testing on. So it's a third level of a potential audit that would have to come from specific funding that has to pass through that. So when you receive funding from the federal government, it comes with what they call a CFDA number. So this CFDA number tells you where the money came from and what the rules are and what the testing has to be done. So it dictates what all of those pieces are done. And it's based on that type of funding and that grant. So in addition to what the federal rules will be, you also have the grant rules. So you're going to look at a grant document and it's going to say you have to use it for this. You can only treat these people. There's eligibility requirements. There's specific reporting that you have to do. Only, certain expenses or certain overhead can be applied to that grant. And all of that has to be monitored and reported to that grant piece. And then additionally tested in the audit related to whatever level of audit you have to have. So that's a lot of information, so I'm sorry about that, but you can kind of get the gist of knowing what kind of revenue streams do I have and how is that applicable to what type of reporting I have to do. And again, how do I protect the donor intent and monitor that compliance with those pieces? So there's those different levels of audit to know how you have to present those financial statements. Another aspect that comes along with an audit is a couple other letters. Each one of those levels of audits has their own report. And that's what the auditor brings to tell you whether it was a clean opinion or not. But they also have to tell you if there are any issues that they came across related to internal controls. So you should receive, as a board with an audit, a management letter. There's two letters. One's we call a management letter, and the other one is a governance letter. So the management letter is going to tell you of any findings that they found, whether it be compliance or whether it be internal control. And they put them into three buckets. It's a material weakness, it's other, and it's not really important, but mainly a recommendation for what we wanted you to do better. Or there's this middle ground called significant deficiencies, which is kind of not as bad as a material weakness, but a little bit more than other. So you're going to get a report that shows what their findings were from these audits to talk through. And you have to respond. You have to respond to what those findings are. And then there's a governance letter. The governance letter is directed to the board specifically. And it is the auditor's communication directly to the board on how the audit went. You know, did we have any issues? Were there any problems? And then it goes through what is important in the financial statements. They're going to go through and tell you, you know, here are the policies that you're following that are important. Here are the big estimates that we had to, you know, that we audited in this. Here are the note disclosures you need to pay attention to. So you want to make sure that somebody in the group in that board is going to have communication directly with the auditors to make sure that they understand if there was anything that they needed to know specifically. And when I'm presenting an audit to a board, I always make sure that, you know, management steps out of the room and I allow that board to ask me questions, and I can make sure that they are comfortable on that one-on-one without having management in the room. So I think that's a very big part of a board's responsibility when it comes to an audit, is making sure they are having direct communication with the auditors and that open line of communication with, if there was a question or an issue, they can come to the treasurer of the board or the chair of the board, or make sure that they communicate whatever those issues may be. Okay. So only other thing I wanted to mention on GAAP financial statements is to keep in mind that in the nonprofit world, everything has a different name. You know, where we have a balance sheet, it's a statement of financial position. Income statement is a statement of activities. So there are different terminologies for it. You know, assets minus liabilities isn't equity, it's net assets. So there's just different terminology that you'll want to be familiar with when you look at an audit, and make sure that you understand all that you're looking at. I still have a hard time. I use both terms as I'm talking through everything. So I know we're getting close to time, so I want to make sure we have questions. The only other thing I wanted to mention is in a nonprofit, a lot of times you see endowments. That's a whole different animal, and it has a lot of rules. So when you come across an endowment, make sure that you do a little investigating and find out what you need to be monitoring in that. And while we talked about donor restrictions, an endowment has a piece that has a corpus piece that can really never be touched. And so that's where it's different. But like I said, there's all kinds of different rules and reporting that will go into what an endowment looks like. So that's definitely, if you come across that, we'll have give me a call and we'll talk through what you need to be monitoring related to an endowment. Okay, so that's a lot of information. So is there anything specific that you guys want to go over in more detail or mention again? Nothing?
I know there has to be some questions out
Take
there.
a,
That was
yeah,
that was a lot. That was a lot of information, and I know you hit it in a very quick period of time. So, thank you for your time today, and guys. Just like normal, if you have any questions, please just feel free to take yourself off mute right now and pop those out there. We got about 10 minutes left, so we can have a couple questions if you have any. I'm not really hearing or seeing any come through the chat,
okay.
but I will share this information, this recording.
Question.
Okay.
Here we go.
So can you explain the difference in Arkansas between the nonprofit status with the state of Arkansas and the charitable part that you have to get authorized for? I know you mentioned over 25,000, but can you explain a little bit about the difference and maybe the whys behind it? Thank you. And you've done great. I appreciate it.
Oh, thank you. I'm not sure I'm going to be much help. Now, it's a charitable registration with the state of Arkansas. So if you are a nonprofit entity, if you fall under that 501c3 and you solicitate certain amount, then they want you to be registered with the state. And the purpose would be, you know, the same reason we want a contractor to be registered with the state is we want some level of protection for the public. We want that contractor to be licensed to know that it's legit. We want that charity to be licensed so that the public can then have a lot more safety and security in making donations to that charity. So I think that's the purpose behind it. And I would have to go back. I have to read it every once in a while to go back and look at the specific rules. They're posted on their website on what is required under that charitable registration. I don't even think there's a fee to do it. It's just a matter of getting on there and getting that done. It has to be done annually. So you would go through that process on an annual basis. But that's my purpose.
So just registering with the state as a nonprofit does not automatically do the charitable part of it. And if there's a donation of over 25,000 before that's done, is that a issue, or is it just file annually and you're good? Well,
I think you are required to file if you solicit donations and receive more than $25,000 in donations. The audit requirements for those who file is separate. But registering to do business in Arkansas as a nonprofit is different than registering as a charity.
Okay, and the 25,000 is aggregate, so that's in total, not an individual.
That's my understanding, yeah. Like I said, I'd have to go back and have to read through the specifics every time. There is a threshold that, you know, for the PTA organization that might only do $500 for the fundraising, they don't have to register necessarily with the state of Arkansas. But, you know, at some point, there's a lot of charities that need to be registered with the state of Arkansas. Now, do I think everybody does it? You go on there and look at that list and see if you can find 5 of your charities. So, but it is out there. It is a requirement, and we have clients that go through audits because of it.
And is there like any way that we can get like a cheat sheet or something like that I could send out to this group for later, and also share your contact information in case they have any questions? Okay, perfect.
I do have some materials that come from the AICPA, specifically to some board orientation and a couple of things like that, and I'll put something together for sure.
Perfect. If you could send that over to me, then I can get it out to this group, along with your contact information as well. So if they have any questions later, they can follow up with you directly.
And, we didn't talk a lot about knowing your organization, not just the industry of nonprofit, but knowing the specifics. Like I mentioned, if I work with United Way, there's a lot of United Ways that I could benchmark from. Having that information, that the need for an organization to be healthy, whether it's for-profit or nonprofit, it still applies to nonprofit. It's important to have reserves to be able to function, to be able to weather a 2020.
That is very true. I think last year during this program, I heard a statistic that most nonprofits only have a reserve that can last them for about 90 days.
Yeah.
So that has definitely been put to the test here in 2020. We have a couple more minutes. If there's any other questions or final thoughts, feel free to shout those out right now. If I'm not hearing any, I just want to thank everybody again for jumping on this call today. We're going to finish up the board service certification next Friday, same time, same place, 10 a.m. We will. Oh, do I hear somebody?
Yes, sir. This is Renard. Can you hear me?
Yes, I can.
I had a quick question in reference to, I know earlier she spoke about lobbying. And so I thought that there was a small amount of lobbying that could be done in reference to the particular organization. I just wanted some clarification on that one, if that's okay.
I would have to look at specifics. I know it depends on the type of nonprofit organization you are. So as a 501c3, I think you're really restricted, but there are other types of nonprofit organizations that allow, that are guaranteed, that are set up for that purpose.
Yeah,
but I do think there's a big limitation on that piece. I don't know if I just don't know off the top of my head if there's a threshold that you have to have over.
Here at the chamber, we're a 501c3, but we're also a 501c6 and a 501c4. I think the 501c4 is the one where we do most of our lobbying through. That kind of goes back to the conversation that we had last week with the kind of the legal side of it. Nonprofits, they're able to advocate, but they're not necessarily able to lobby. So it just depends on what 501c you are and if you can lobby or not. If you're a 501c3 or 501c6, you can't. But if you're that 501c4, then that's more the political lobbying realm that you're able to be in. Does that kind of answer your question?
Yes, sir. Thank you so much.
You're welcome. Well, thank you guys again for attending. Again, next Friday, we will be here, same time, same place. I'll send out a recap of this one later on today. And then I will send over the Zoom link for next Friday's meeting on Wednesday. We'll be looking at the fundraising side. So along with the reporting that Katie just talked about, now we're actually going to go out and get some money for our organizations that we love so much. Thank you guys so much for today. Enjoy your weekend, and we'll see you next Friday.
Thank you.